In this presentation, we're going to record a deposit related to selling a short-term investment. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to be opening up our reports first. So we're going to go down on the left-hand side. We're going to be opening up the balance sheet report. So we'll open up the old balance sheet. And then we're going to change the dates up top. So I'm going to scroll up top and change those dates from 01/01/20 to 12/31/20. We're going to go ahead and run that report. I'm going to duplicate this tab. I'm going to right-click on the tab up top, duplicating it, put it to the right. Then I'm going to go back to the left. We're going to do the same for the profit and loss report. We're going to go to the reports down below. We're going to be opening up the P&L, the profit and loss, the income statement. Then we're going to be changing the dates up top. Once again, I'm going to go for the full year here, even though we're in month 2, so you can think of it as monthly or yearly. I'm going to go for the full year, which is going to be 01/01/20 to 12/31/20. Then we're going to run that report. Then I'm going to duplicate the tab up top, right-clicking on it to duplicate it. Then I'm going to go back to the left and do this one more time with a trusty trial balance. We're going to go down to the reports down below. We're going to type in trial balance and not trusty trial balance, just trial balance. And then we will open up that report. Then we're going to scroll back up top, change the dates again, 01/01/20 to 12/31/20. Run that report. Then I'm going to right-click on the tab up top to duplicate it, duplicating that tab. All right, we're all set up. We can look at what we're doing now. I'm going to go back to the balance sheet first. Balance sheet report. Going to close the old hamburger. Going to hold down Control, scroll up a bit to 125. And what we're going to do now is we're going to say that this investment down here, the E-Trade investment, has become due, or it's something that we want to sell at this point in time. So we're going to say it went up in value. So we're going to say it's currently at the 17,000, and we'll say, whoa, we're going to go ahead and sell that at this point in time because, that's more than we expected here. Is, buy low, sell high. That's my motto. So we're going to go ahead and sell it at this point in time, and we're going to have to record then the reduction in the investment. This reduction is going to have to go down. This investment needs to go down to 0. We're going to have a deposit in the bank account, but the deposit's going to be for something over the amount that we sold it for the 17. And the difference is going to be some type of gain that we're going to have to record. So we're going to record that transaction. Now, also note that it's also possible to have another kind of transaction in another type of investment that I just want to mention at this point in time. If you have something in like a CD or savings account that's paying interest that will become due at a later point in time, then it could be the case that if you have the same bank that you're working with, that could just roll over into your checking account. You can have it roll over possibly at the term or maturity of that particular investment. If you saw that then to happen, you would have a similar situation that you may not even know about until you actually look at your bank statement. You're like, hey, there's a deposit of, whatever the deposit is. And you're going to say, well, that's great, but where did it come from? And then you're going to look on your assets and say, oh, this investment probably became due, right? It automatically matured and then rolled into the checking account. And you'll have a similar kind of transaction there. The deposit will be for higher than the investment amount. Why? Because you had a gain. In that case, interest income. In this case, we're going to say it's basically capital gain. We sold stocks, okay? So that's going to be our transaction. So again, this isn't like a normal type of transaction because we don't sell. This isn't what we do for our normal type of business operations. This is something that we put money. We had excess money. We put it into an investment, and now we're going to be selling that investment. It's not something we do all the time, and therefore there's no form that we really think of that would be in our normal business cycle for this transaction. However, we are dealing with cash, and cash is going up. Therefore, the form that we would think about would be the deposit form. So we could use a register to enter this into the register, like the checking account register. However, because there's 3 accounts that are going to be affected, it may be easier to use the deposit form to enter those 3 accounts that will be affected, and that's what we'll do here. So I'm going to go back to the first tab to do this. I'm going to go back to the first tab. I'm going to hold down Control, go back down to 100 so it doesn't like squish up my deposit form when I do that or do anything funny to it. And then we're going to go to the other tab over here, and we're going to go to the record deposit. So we're going to record a deposit. So here is our checking account. It's going to be going into the checking account. We're going to put this in there as of 02/06/20. So it's going to be February 6th that we want to put this in there as of. These deposits up top have to do with items that are in the undeposited funds. from sales receipts or received payments. That's not what we want. We're going to leave those alone. We're going to go down below to this item which says add funds to this deposit. Going to select the drop down for that. This is where we can basically add the accounts that we need to account. So we have received from, we received it from E-Trade. So E-Trade. So if I say E-Trade, there it is. And then the account that we're going to have is also called E-Trade. We put it, if we go back to the balance sheet, we put it under the sub account of investments and then E-Trade. So I'm going to say, all right, it's going to go into E-Trade here. E-Trade. I think I put a dash here. E-Trade. So there it is. It's the sub account of investments. That's the one we want. So notice what it puts up top because it's a sub account. It puts the parent account, investments, and then the sub account of E-Trade. Then we can have description, sale of investment. We're going to say it's an electronic transfer, and we're going to go to the amount, which is going to be, I have to pick up the amount of the 12,000 here. Now we're saying we got 17,000, but we have to reduce this amount by the 12, what's in it. So I'm going to reduce this by 12,000. And then we're going to have the other account. Well, what's the difference? It's going to have to be some kind of income account, some type of gain. So there's got to be a gain on investment. Let's see if there's going to be anything in QuickBooks related to a gain on investment. I don't need a vendor. I'm going to select over here. Gain on investment. It would have to be some income or other type of income account. Unapplied cash, uncategorized income. So it doesn't look like there's one appropriate for us there. So I'm going to call it gain on investment. So something like that, and actually we'll add that. Now we need to choose the account type. Now it is like income that we have here because income is going to be going up, but it's not part of our normal business type of operations. So if we put it into income, it's going to show up at the top of the income statement. But I'd rather kind of pull this one out. I'd rather say, hey, this is unusual. This isn't part of my normal operations. I would rather have income and expense that are my normal operations, and maybe put this at the bottom of the income statement as kind of unusual income or other operations so I could see a subtotal. For that, I'm going to put it into other income. So I'm going to call it other income because this is not a primary income source. And then you see you have the types of descriptions. I'm going to call this other investment income. So I'm going to call it other investment income here. I'm going to call it gain on investment as the name. So let's go ahead and say save and close. And that we're going to put in, and we can put the same description, sale of investment, and then I'm going to put the amount of 7,000. So there we have it. So actually I'm going to put the amount of 5,000, and that brings the total up to the 17,000. Okay, so what's that going to do then? It's going to increase the checking account by the 17,000. It's going to be decreasing the investment down to 0. It's on the books at 12 down to 0. It's going to be increasing the income statement by 5,000. But it's going to put it on the bottom of the income statement in the other income, or in at least a separate section of income, as opposed to grouping it into our primary income section. All right, let's check it out and see what happens. We're going to say save and close. Then let's first take a look at our trial balance. So if I go to the trial balance, I close the hamburger. I'm going to scroll up a little bit to that 125. Is that at the 125? There it is. I thought it was a little small still. So then we're going to be in the cash. So I'm going to go into the cash account of the checking account. Scroll back down, and we should see. Now notice we're always going to have this 228 there that kind of bugging us because I did a transaction at the beginning of the end of the month to see those two loan transactions. So we want the one above it, the 26. That's the 17,000. We selected 17,000. That of course will take us to our deposit. There's our deposit. Closing that back out. Going to go back up top. Going back up top and going back to our TB trial balance. The other side is going to be taking down the investments we had. Here's our investment in E-Trade. It still shows the 0 even though it is 0 because there was activity in this time period that we are covering. So that's great because it allows us to see the auto zoom. If I scroll back down, there's our deposit. Only 12,000 of it being applied here, taking down the asset down to 0. Scrolling back up top, going back to our report. Scrolling back down to the bottom, we're also going to see the gain down here. Here's the gain. And if we go into that, we had an increase of the 5,000. It was just an incredible investment for the stock market, was doing great. So then I'm going to go back to the Balance sheet, let's check this on the balance sheet. Same kind of thing. Obviously, the checking account would be going up. So same account here. That's straightforward. The other side being the investments. Oh, I have to refresh. Let me refresh here. Going to refresh the screen. Wow, that's much fresher. All right, so now if I go back down, the cash obviously was affected. The other side being an E-Trade, so that's going to be in the investments. Again, the zero still showing up here, even though it's down to zero, because it's going to show us the activity due to the date range we put up top. The difference then going to the income statement. This is where we really want to put our time here. If we go to the income statement and scroll down, close the hamburger over here, then at the bottom of the income statement, we're seeing that gain. Notice that is income. It's in other income. But this is nice because we get to see the sales information that is really our business sales information, the cost of goods sold, and business type of expenses to get a subtotal of basically our net income from just operations, net operating income. And then we can have our other income down below. And we're basically telling ourselves and readers saying, hey, this is kind of not normal. This isn't going to happen every time period. This is some other investment that we had down here, but we did have that income, and that brings our net loss up to the 133.93. Also note, of course, that we could run the income statement just for the second month. We're now on month 2. So you might want to say, let me check out the income statement from 02/01/20 to 02/29/20. Is there 29 days in this month, or is it? So there we have it. Yeah, so 29 days, 2020. I knew it. So we're going to scroll back down. No income yet for normal income. We've got the interest, and then we have this gain down here. So we could consider the income statement, what's going on just for the second month. Remember that the income statement is a timing statement, and therefore you can do that. If I did that for the balance sheet, it wouldn't make a change, right? If I said 02/01/20 to 02/29/20, and I ran that report, and you still have all the numbers here are basically all the same, right? Because the ending date is the same. The ending date isn't the same. I said 12/31, but we haven't put any data in there past February. So in essence, the ending numbers are the same as of the point in time is the same. And the thing you want to keep aware of is if I go down to the equity section and I look at the net income number, it's at 133.93, even though I ran the period from just the month of February. Right, and if I go back to the prior, the profit and loss, you're gonna say, well, net income isn't for that period. It really should be 4,404. Why is it not reflecting that number? Because really, that rollover function for a QuickBooks works on a yearly basis because you're yearly so the rollover really happens at the end. This kind of automatic rollover that QuickBooks does, that generally does is a yearly type of thing. So that 133.93 is for the year of 2020, even though we ran the report only for the month. So you kind of got to keep aware of that. If I go back to the P&L, in other words, and I change the beginning date from 01/01/20 to 12 to just 2/29 is fine. 2/29 is fine. If I go back down, there's the 133.93 on the balance sheet. There's the 133.93. So just be aware how this net income number works. It can be useful, but it can also be a little bit confusing if you try to look at partial periods like a month or something like that. It's going to roll over basically at the end of the year, not at the end of the month, even if you run the report for a month.